Hello and welcome to another episode of the Express Economist. This week, we'll be talking about the Indian rupee. Many of you would be reading about the Indian rupee, the news around it, and it is quite likely that you might be confused about the terminology that is typically used when we talk about the Indian rupee. I was just doing a Google search on rupee news, and typically you would find reports which say the rupee has strengthened, or the rupee has weakened, or rupee has gained against the dollar, or rupee has weakened against some other currency. There are terms like rupee is proving to be resilient or not so resilient. And for a lay reader, it might be confusing. What are we talking about here? What is rupee doing that is giving us chance to use all these adjectives and these, and how are you affected typically? Is a weaker rupee necessarily a bad news for India? Is it bad news for our exporters? Is it bad news for importers? How does it really play out? So today we have a guest who would help us understand many of these things. We have Dipti Deshpande, who's the Principal Economist with CRISIL. So Dipti, let's start with the first question about, when we talk about rupee exchange rate falling or rising, what does it exactly mean? Does it have something to do with the demand for rupee in the international market?
Yes, hello everybody. Thanks, Udit, for having me on this session. I think it's simply it's very easy to understand. To be honest, I think one needs to really understand which are the terms or the adjectives, like you said, that go with the rupee. Very simply put, rupees exchange rate falling means that now I have to give fewer rupees to get $1. So one would typically say that rupees exchange rate is appreciating, or the rupee is strengthening against the dollar. So if the exchange rate is rising, that means rupee has depreciated or weakened against the dollar. So I need to now pay more in rupees to get $1. I think that's the main distinction between the two. So in November, for instance, I could get $1 by giving 74 rupees. Now I need to give 76 rupees or a little more. Fundamentally, like you asked me, this is definitely a result of what is happening to demand and supply. So demand for dollars as against how is the supply of dollars in the market. So I think before we talk a little more on that, it's important to understand, why do we demand dollars? There are two main reasons. One is to trade. If I need to buy imports, if I need to import oil, gold, electronics, edible oils, metals, all of that that's been spoken about, I need dollars. Now, what happens is that if you look at the Indian economy, what I export is always less than what I import in value terms. And then there's a gap that gets created. So there is a gap in terms of my dollar requirement. That's called the deficit, or the trade gap, trade deficit. Now, if I want to meet that gap, I need some supply of dollars to really come in. So where does this supply of dollars come in? Broadly, it comes from abroad. Dollars coming in from foreign investors who want to invest in our country using those dollars. It may also come in the form of remittance incomes, people working abroad and sending money back home, again in the form of dollars. So to simply answer your question, if our demand for dollars goes up, but investments from foreigners, for example, doesn't go up to that extent, then the value of dollar vis-a-vis the rupee rises. Or in other ways, rupee's value of exchange rate vis-a-vis the dollar falls, or rupee is basically depreciating.
Right. And we often talk about, before we get to what has been happening to rupee versus the dollar, and all the questions of whether it is resilient or not, and etc. One more thing, because we often read about this, is about RBI's role. Because it's not as if it appears that the trade is not happening in a free market. There are some intermediaries. So can you just explain RBI's role? Does RBI tweak this exchange rate in any way, affect it? And do other central banks also do that?
So it clearly depends on what the mandate is. So until a couple of years back, the RBI's mandate was not very clearly defined. So it could either maneuver into the markets by, working around on the exchange rate, or it could do something in terms of the interest rate or the repo rate. I think what the RBI has decided is that it's not going to tweak the exchange rate. It's going to be more of a free flow, whereas it's the interest rate that they're going to work around with. There are central banks where, for example, in economies where exports play a bigger role, that's where the central bank tends to move or fix the exchange rate per se. What happens in case of RBI is that it intervenes in the market when there is a lot of volatility, when there is a lot of depreciation, or when there is a lot of appreciation in the market. It intervenes by buying or selling dollars, so that there is a very orderly movement in the exchange rate, and then it doesn't hurt exporters or importers as much. So I think that's the role of RBI, and that's what it's been doing now for the past couple of years.
So very quickly, when we say that RBI intervenes and buys and sell dollars, can you just quickly elaborate how does that affect, when RBI buys or sells dollars? Suppose right now rupee is depreciating, that is what the news is. So how is RBI maybe holding back a fluctuation in that? How does it do it?
Yes, so I think very clearly a couple of days back, the RBI did something called as a so very clearly a couple of days back, what the RBI did was it did a dollar rupee swap in the market. So what that it basically did was that it sold the available dollars to banks, and it pulled out rupees from the market. When rupees were pulled out by the market, so you reduce the available amount of rupee, and therefore the value of rupee goes up. Similarly, when you're selling that dollars in that transaction, the value of the dollar goes down. So if that is happening, you can arrest depreciation in the rupee to some extent. So I think that is how the RBI can basically come in.
Right. Now, coming to the report that CRISIL, and you were one of the primary writers for that, has just come out with a report about rupees depreciation. And one of the things that when you say that you found that obviously rupee has fallen, but you've also said that it has fallen vis-a-vis the dollar, let's say it's a exact quote. And you've also talked about it being more resilient than in the past. So could you elaborate a bit about what has happened to rupee and why is it so-called, the term resilience, what does that mean?
Yes. So I think when we speak about resilience, again, we are measuring the value of the rupee against the US dollars. And we are essentially comparing the current situation with two other situations in the past, which were shocks, similar shocks that came in from the external side. So the first shock was when we had the global financial crisis in 2008. The second was the taper tantrum in 2013. That is when the US Federal Reserve said that they are most likely to start they're going to stop infusing liquidity into the market. So if you look at the rupee, then I think if you rupee on average depreciated by about 8.5% in 2008 when that first shock hit. In 2013, the depreciation was about 11.3% or so. Now, if you see, we've had two shocks between November and say March. First was in the form of the US Federal Reserve reducing the amount of liquidity that it was pumping into the markets. And secondly, from mid-Feb, when the Russia-Ukraine conflict began. In this period, the average depreciation we've seen is a little around 2.5% against the dollar, which is significantly less than what we saw in the past episodes. So I think when we look at our own past, the rupee is a lot more resilient this time. The resilience comes in from the fact that on an external perspective, from an external account perspective, we are in a much better position to brace these shocks. Now, what do I mean by that is in that in each of these previous two episodes, for example, our current account deficit, or like I said earlier, our demand for dollars was much more higher. It was at about 5% of GDP in 2013. Now it's down to about 2 to 2.4% of GDP or so. So to that extent, our demand for dollar is less. Second is that our foreign exchange reserves that are available, we have a much higher amount of reserves available now than we had then. So one of the measures, for example, is something that we call an import cover. So given the level of reserves that I have, how many months of imports can I fund out of it? So that import cover had fallen to as low of as 5 months in 2013. Now, on average, that is at around 12 or 13 months. So there's a cushion available. Given Forex reserves, it gives an additional tool to the RBI to work around when there's a very sharp depreciation. So like I meant, the dollar rupee swap that was possible, it was possible because we had that much of reserves available for us. So it creates a natural shield in term when there is an external shock. So to that extent, our resilience is a lot better when we compare to our own past.
Great. That's very well explained. One more thing is that we are till now, we've been talking about rupee vis-a-vis the dollar, but that's not the only trade that we are dealing in. We obviously trade across the world. So what has been happening to rupee vis-a-vis, say, the competing currencies, and what is the significance there?
I think the reason for speaking about rupee vis-a-vis the dollar is largely because a large part of our trade tends to be against the dollar. Of course, we are depreciating against a couple of other currencies as well, but fact is that it's a natural play. Rupee depreciation is based upon a number of fundamental factors that I mentioned. At the same time, we are comparing rupee against the dollar, and dollar has been seeing a sequence of appreciation over the past couple of months, meaning that with interest rates there now going up, expected to go up significantly further, US doing much better coming out of the pandemic, better than a country like India, there is a natural tendency for capital flows to go in towards a safe haven economy such as the US. So naturally, I think the comparison tends to be a lot more with the dollar, and that's how we are talking about it, and that's how we are measuring it.
And with the competing currencies, what has been the trend?
I need to look at the numbers specifically, but the depreciation is not as much as we have been seeing as against the dollar.
Okay. And then we come to a broader question, which again, a lot of our viewers and readers want to understand, is that when we talk about rupee, we often, there is always a confusion about whether a strong rupee is a good thing, whether a weak rupee is a bad thing. Now, typically, one would expect that if the rupee has become weaker, so that you need more rupees to buy $1, that might help our exporters, but also might make our imports more costly. Can you just elaborate a bit about what is the significance of this? Is there a direct link between a strong rupee and a beneficial impact on the economy, or could a weaker rupee also have a beneficial impact on the economy or some aspects of the economy?
Yeah, so that neither is good, neither a very sharp depreciation nor a very sharp appreciation, because like you rightly said, if the rupee is weakening or depreciating quite a bit, it's certainly going to help certain exporters. For instance, services exports will immediately benefit out of it, but there are some goods exports wherein the import intensity of those exports is very, very high. So for instance, just for petroleum, we import quite a bit of crude oil and then we process it and then export the petroleum products. So as a result, the margins tend to get crimped up because your import cost is high, you're importing that component and then working on. So there are a number of sectors, specifically when you look at goods trade, where the import intensity tends to be high. So it's net not very beneficial for the economy as such if there's a very sharp depreciation. Again, from an inflation perspective, because a very weak or depreciated currency immediately pushes up our cost of imports, a lot of those imports are necessities in nature, be it oil, be it edible oils, and a couple of others. It directly percolates into retail prices, and there's a hit there. Similarly, I think if there is a very sharp appreciation, it might seem to be benefiting imports for a while, but then it hurts our exports too. So I think the ideal way to go by it is, if you look at the trend, India has been having, given our current account deficit, given that it is at a certain level as a percentage of GDP, the on average, rupee has been depreciating at about 2.5 to 3% every year against the dollar. This is a 10-15 year trend. So as long as we are on that trend, I think it's comfortable. When it tends to stray away from that trend, I think that's when it's concerning for the RBI. And then they'd like to come in and intervene and smoothen off some of the sharp movements.
So if I was to recap this, it's not so much about it's not a moral thing. It's not a country's strength issue. Whether the rupee appreciates or depreciates, it should not fluctuate too much. The exchange rate should not. That would harm us more than particular levels of rupee.
Absolutely, yes.
Okay, great. So just wanted to bring this session to a close. Last question is about where do you see the rupee going from here? In the report, you mentioned that there are certain risks to rupee. Can you elaborate a bit about where do you see it going and what are the factors that are there in your mind?
Sure. I think we have a fundamental based call on the rupee, wherein, like I said, we look at how the demand side factors are going to have an impact and how the supply side factors are impacting. So on the demand side, I think the big factor is the current account deficit. We're expecting the current account deficit at 1.6% of GDP for the current fiscal, and we expect that to go up to 2.4% of GDP or so for the next fiscal. And a large part of that is because our import bill goes up. On the supply side, I think the effect comes in because there's liquidity tightening that's been happening from the US. We also have rate hikes now. The US Fed itself announced that there'll be 7 rate hikes this year. So I think given all of that, there will be a little bit of uncertainty and jitteriness in the markets. And therefore, broadly, we believe that the rupee should settle around 77.5 in March of 2023. Now, why that looks a little contrarian compared to the trend that's visible on ground right now is we are going with an oil price forecast of $85 to $90 average for the entire fiscal, wherein we are believing that oil prices would stay at around $100 per barrel for a month or 2 or 3, and then they start softening such that they average close to where we are assuming it to be. So that's the broad assumption. I think current account deficit closer to 2.2 to 2.4% of GDP is not a very worrisome number to have. And therefore, the depreciation is also not very, very significant. Risks, however, come in from the fact that if the conflicts in US and Ukraine don't de-escalate soon, or they take time to de-escalate, then it's only going to mean that oil prices stay high for longer. And that's where some of our underlying forecasts on CAD, etc., see some downside pressure. So that is clearly one of the things on the demand side that could work as a risk. On the supply side, if inflation control is a bigger problem for the US Fed and they hike interest rates much faster than what they've announced so far, balance sheet reduction, etc., also happens at a much faster pace. It means that the available supply of dollars is going to get crimped, and that could further add depreciation pressures to the currency. So I think these are the two large risks that we are looking at.
Right. Thanks a lot, Dipti, for that lovely, lucid explanation of what's happening to rupee and why it matters and what doesn't matter really. As many of you would have understood that, what are the factors that typically decide rupee's exchange rate, and why do we bother about saying whether it's weakened or has been resilient, and what is the outlook for the coming year? As Dipti underscored that there are many things in play right now, and it's very difficult to frankly take a position on this matter. But for all concerned, I think the most crucial thing is the fluctuation should perhaps be reduced. It's not per se a particular level of rupee that we should be bothered about. And we should not attach our feelings with a particular level of rupee, thinking of our country like that and whether it's strong or not. It's the fluctuations we should bother about, and they should be reduced. So thanks a lot, Dipti, for joining me on this session. Thanks to all of you for watching this session, and stay tuned. We'll be back next week. Thanks a lot.
Thank you.